Hello everyone, I decided to make this video to explain to you a difference between the regular IRA and the Roth IRA and the Index Universal Life. I'm a licensed producer who can write life insurance for people and also can set up annuity for the retiree. A lot of questions asked is what is the difference between the Roth IRA and the regular IRA? But first, I want to talk to you about the Index Universal Life and what is the difference between the Whole Life and Index Universal Life. I represent too many clients, and the company I work for is an independent broker that I can write with many different companies. It doesn't have to be just one company. I can represent Pacific Life, Columbus Life, Transamerica, or Nationwide. Just pick any company appropriate and suitable for my client, because there is no such one size fits all. What is Index Universal Life Insurance? Index Universal Life Insurance IUL is a type of permanent life insurance policy that combines the death benefit of the traditional life insurance with the potential accumulate with cash value based on the performance of a stock market index. Unlike a whole life insurance, which offers a fixed interest rate on the cash value, IUL Index Universal Life policy allow policyholders to allocate a portion of their premium into the equity index like the S&P 500 or any kind of index in the stock market that you chose. This allows for the potential higher returns, though the cash value is not directly invested in the stock market. Why? The key feature is the death benefit. First, let's talk about the death benefit. Like all of the life insurance policy, IUL provides a death benefit to the beneficiaries upon the policyholder's death. Second, the cash value growth. The policy includes a cash value component which grows over time. The growth is linked to a chosen stock index but typically comes with cap, maximum return, and a floor is the minimum return. I will explain to you more. Premium flexibility. The IUL policy allows the policyholder for a flexibility for premium payments. Policyholders can adjust how much they can pay into the policy, though certain minimum must met to keep the policy in force. The tax deferred growth, and this is the important one. The cash value inside of the policy growth on the tax deferred basis, meaning no tax owed on the gains unless they are withdrawn. That means that as long as the account is keep growing and you don't withdraw it, you don't have to pay the capital gain. And then the last feature is the loan and withdrawal options, which is very nice. Policyholders can borrow and withdraw the fund from the cash value that they accumulated, and often without the tax implication if managed correctly. That's what I will talk to you on the next video about being your own bank. That means the money that you accumulate into the cash account is your bank. You own it. And instead of when you need the money, instead of go borrow the money from the bank for whatever you need, you borrow from your own account. and you take the money out and use for whatever reason you chose. And that is a good thing for you, that you can borrow on a loan on your own life insurance account or annuity just to take care of what you need with a very low interest rate, and you pay for yourself. So the benefit of index universal life insurance, the first benefit is the potential with higher returns, because the whole life you have a fixed interest rate, so the return is, let's say, 4 or 5% per year, and inflation is already 10%. That means the money you grow in the whole life, the regular whole life insurance, is not going to work if inflation keep growing higher. So the potential for the index universal life is you have higher returns, since the IUL is tied to the stock market. So let's talk about the benefit of index universal life insurance. The first benefit is the potential of higher returns. Since IUL is tied to the stock market indices, it offers a potential of greater returns compared to the fixed rate interest rate of life insurance policies. When the market performs well, the cash value will grow significantly. And the second one is the downside protection. What does that mean? One of the most attractive features in the IUL is the downside protection. If you invested in 401k and you have to manage in any stock on your own, you have the ups and downs of the stock market, but there is no guarantee. So someday you have a very high performance, and the next month or some in the future, when the stock dies down, your portfolio lost almost half, just like during the 2008. So for the IUL, the downside protection is, even if the stock index performs poorly for that year and it's going down, the policy cash value typically won't decline because of the certain level. There is a floor with 0% of growth. That means you will break even that year. Thanks to the floor feature, which is often set at the 0%, this means that the policy holder cash value won't lose any money. Even though that year when the stock go down 40%, your money is still not earning anything that year, but won't lose anything. And the third benefit of the index universal life insurance is the flexible premium features. Unlike whole life policy that have fixed premium, IUL allow policyholders to adjust their premiums, offering the flexibility of, as long as there is enough cash, even you can skip a payment or temporarily not paying anything for several months. And the fourth benefit is the tax advantage. The tax advantages. The cash value grows tax deferred, so the policy taxes on any growth until they withdraw funds. Additionally, death benefits are generally paid out tax-free to the beneficiary. That is the good thing. For example, if you save $500,000 in the saving account somewhere, and that saving account growing for you some interest, it's not only you have to pay for the capital gain, but when something happened to you, before you inherit that money to your beneficiary, they have to pay tax on the top of it. But the IUL policy, it's not only that it tax defer, you're not going to pay anything until you withdraw But if something happened to you, the life insurance, that benefit plus the cash account in there will be paid to your beneficiary tax free. That is a good thing. So just think about it. The same amount of money that if you save and invest it by yourself, by the time you inherit to your families, your children, your grandchildren, they have to be pay tax on it, but not through the form of the life insurance index universal life. They will receive it tax free. To the cash value, this is very important. The cash value can be used as the loans or withdrawals, providing the liquidity. Loan can be taken against your policy at a competitive rate, and if you done correctly, most of the time in the index universal life, the loan run about 5% interest rate. The loans won't incur taxes. However, any unpaid loans will reduce the death benefit. For example, if you take out 100,000, if you have it in the cash value to use it for any reason, you pay interest rate 5% on the loan. But if something happened when you die before you pay off that loan, the beneficiary still receive the life insurance from you 500,000, subtract the loan that you borrow, and the rest of the money still go to your beneficiaries. And the another important feature is with riders. Let me explain. IUL policy often offer various riders such as long-term care, waiver of premium, or critical illness riders, allowing the policy holders to tailor the policy to the specific needs. Because most of the time when you save money somewhere in the bank and not in the form of the life insurance, and you don't have the long-term care, and even people who qualify for Medicare don't pay for long-term care. They only pay for emergency hospitalized, but they don't pay for nursing home or long-term care. If you come home and you need some long-term care, you have to use your own money. But the life insurance index universal life have the riders that tie that one into your policy, so you can use it to take money out and take care of what you need at the own age. So these are the considerations. Complexity. IUL can be complex products requiring a good understanding of how interest, credits, caps, floors, and other policy features, the fees and the charges associated with IUL, such as mortality charges and administrative fees, can reduce the cash value in overall return, but fee charge happen to anywhere, even in the whole life policy. The caps and the participation rates index linked to the interest for the maximum you can earn can limit potential growth. These are something that I have to go in detail if I have an appointment with you, and I will go explain further. Otherwise, it's just too complex. And that is just the options and the choice that you choose how to let your money grow. So I'm not going to go into that detail right now. But in the summary, Index Universal Life is an attractive option for individuals who are looking for the lifelong protection, the opportunity for the cash value growth linked to the stock market, but don't have to worry about the ups and downs of the market, and the flexibility of managing the premium. However, understanding the index universal life and how it works, you need the appointment, and that's where I make the appointment to come out and explain to you more detail. For this video, why do I choose policy for you from what company? Because sometimes when you work with a company, for example New York Life, they have only particular products to sell it to you, and that's it. You don't have much of a choice of choosing what kind that you can do for your money or other company. But for me, I work with many different companies, so it's not one size fit all. I can choose the right company for the right product for the right customer. And one of the product that I choose is the Index Inflorer Plus from Columbus Life. Because this company, why Columbus Life? Because I have researched too many companies, and the product I find out Columbus Life, when you consider financial services and products, the resource and appetite of the finance services provider are paramount. Columbus Life Insurance Company is a leader in financial strength, service quality, and performance excellence. We are part of the Western Southern Financial Groups, a family of financial services companies whose heritage dates back into 1888 and whose assets own 71 billion and manage for 34 billion total 105 billion in September 30th, 2023. So when you ask me to send to you some information, so you can, this is a client guide that I can send it to you just so you can take a look at it. And if you do need to know further, I work with the company name is Robert Retirement Group, and Robert, he is a very influential CEO and license who can talk to you most about life insurance, annuity, set up annuities for those retirees, and will explain to you what is the difference between the index universal life insurance and the annuity. They work similarly, except that there is an accumulation phase. When you're young, you don't have a lot of money, but you put aside a little bit something, just like you throw in the seed into the soil and try to grow something. It's called accumulation phase, mean a little bit at time, and you reap what you sow, which means that you start sowing one seed at a time, and when you get older, it grow into the oak tree, so that when you reap the benefit. But that also need times, because you cannot sow and reap in one day. So the index universal life usually work best for younger folks, for people who work and already have some extra money and start putting in for 20-30 years and later have a big lump sum. For the annuity is when people at my age that they work the whole life already, they already accumulate some lump sum in their 401k or in any form of IRA. And now when they retire, they don't know what to do with their money, how to move their 401k into another form at IRA or annuity to keep their portfolio continue growing. So that when I come and set up for you the annuity, which means that you put in the lump sum like 500,000, a million of your hard-earned money, and transfer it from the IRA into the annuity, and then you set up Either immediate annuity mean that right away you take out portion every month to live on, or you can set up 10 years annuity, 20 years annuity, or 15 years annuity on your time horizon, and you say, I put the money in and I want to pull it out 10 years from now, particular how much per month that I need to live on, and that when we set it up for you. But during the time the money sit in the annuity, it's earned similar to the index universal life with the same pattern, that higher potential earning, but there is a floor protection with you when the stock market going down. So contact me to find out more information about it, and I will explain to you more and how to set up your annuity. Just keep in mind, I'm not a financial advisor, and I'm not going to advise you what to do with your money. I'm just the one that who bring out to you all of the options, the pros and the cons, and how do you do with your money to avoid tax, capital gain, and adhere to your beneficiary tax free. And all of this information and all of these products has been used by many wealthy people who understand and who can keep their assets protection from paying a lot of tax or losing a lot of money through the stock market. Thank you so much, and I put the link below. If you want to contact me, set up the appointment for me to go over all of the options, and the consultation is free. Thank you so much. Until next time, I will talk to you more about the Roth IRA and the regular IRA if you click on this video, and then you can understand more. Thank you so much.